Hello and welcome to another episode of Pakistonomy. My name is Uzair, and if you've been following along this podcast, you know that I am pretty gung ho about Pakistani startups. I think there's a big shift in attitudes in younger generations who've gone from wanting to work at multinationals to wanting to be entrepreneurs or working at startups. And so today I figured we talk about the state of the Pakistani startup ecosystem. There's a fantastic new report out, Pakistan Startup Ecosystem Report 2021, published by Invest to Innovate. It is the most detailed assessment of the state of the ecosystem itself, funding, what sort of funding rounds, some policy recommendations, issues, etc. So the description for that report is in the link below. I would recommend that after you're done listening to it, you go in and jump into the details as well. But we're going to talk about this report with one of the authors of the report, Ambareen Baig. She's head of insights at Invest to Innovate and recently spent many long weeks and months compiling all the data and the assessments of the report itself. So we figured we talk to Ambareen about what are some of the key trends and contents of this report. So Ambareen, welcome to Pakistanomy.
Thank you, Uzair, for having me.
I'm excited to have you. I think you're the third eye to eye person to be on the podcast, and that's a testament to the fantastic stuff all of you guys are doing at Invest to Innovate, Kulsum, Mevish, the rest of the team. And again, congratulations on getting this report out there. It's sort of exciting always to see the trends and the data you put out and the transparency you bring to the ecosystem. So again, kudos to you and your team and keep up the good work. And I want to start with sort of you giving us an overview of what some of the key trends are. Obviously, the headline number was very exciting that Pakistani startups raised over $500 million from 2015 to 21. That also masks the fact that over the last 2 years, we've seen exponential growth and just this unlock in terms of access to funding and excitement around Pakistan and its entrepreneurial potential. So help the listeners understand what the state of the ecosystem is. What are some of the key trends that perhaps as you were digging through the data and compiling this report excited you the most?
Of course. So again, thank you so much, Uzair, for having me. It's wonderful to kind of like talk about the report, not only, but also kind of the, all of the stuff that goes behind putting all of the analysis together. And I feel like that's where we've been able to kind of pick out on the more kind of, deeper details or insights of, especially the interviews that we have conducted so far, or like, for the report before publishing. So I feel like those were some of the most insightful bits in addition to the survey. So first of all, I am Ambareen Baig, and I've been working with Invest to Innovate for the past 3 years, roughly a little bit over 3 years. Essentially, I have been a research practitioner for the past roughly 5 years. And I started out mostly with education psychology research as a grad school in my grad school, but mostly kind of went on to work on youth entrepreneurship projects with a couple of different organizations back in Pakistan, here in Pakistan, and that was really kind of my first brush with the startup ecosystem in Pakistan, which was more in the context of youth entrepreneurship, as I said. And obviously things were way more nascent. This was like 3 years ago. So even then, it was pretty, things were pretty nascent in terms of, the amounts that were being raised or the kind of ideas that were coming forward and things like that, or even like the market readiness at that point. But it wasn't just the startup ecosystem that kind of fascinated me, but its interaction with the research and data. So kind of the intersection that IRI Insights currently is working at. I think that's what I find the most interesting, and not only applied to the context of the wider ecosystem in terms of understanding, what this growth means for the larger, wider economy, but then also kind of understanding how the players are being influenced within the ecosystem, whether that is your entrepreneurship support organizations or us as researchers, or the policy regime, or investors, founders, and all of these different players. So it's not just interesting because of that, but also other work, for instance, with IRI Insights that we do with our portfolio companies on the fund side, which is IRI Ventures. That's also one of the most interesting aspects of our work, which we mostly obviously almost never talk about, and it's also not something that we publish, obviously, because it's kind of, confidential information and data and everything, but it's super exciting because it's a very new area. And at the same time, it has so much potential when you think about just like understanding and developing a really effective data strategy for these companies that are out there. Specifically for us, that means, portfolio companies that we sporadically work with on data initiatives or research initiatives and such. So those are some of the areas that I personally feel super interested in. And obviously, I feel like organizations are kind of, made up of human beings, and we kind of bring something of our own to all of the work that we do. And so even in the work that we do at IDA Insights, through Kulsum and through me, Mevish, whether that's, whoever on the team, Shafra, Ahmed, it's always kind of, the underlying purpose is always to kind of focus on the data asymmetry that we typically talk about on a lot of different platforms as well, which is to kind of, understand that not everyone has equitable access to data. And that kind of has a huge impact on the outcomes, whether that's for founders or investors, angel investors, international VCs, local VCs, policymakers, pretty much everyone, or even entrepreneurship support organizations. So that's one of the biggest goals of IDA Insights work, IDA's work. And then obviously, me as a person and individual, I feel like that's also something that, kind of I find super interesting. So with that, I'll give you a couple of things that I personally found interesting, that are findings from the report and that are primarily challenges from the report that we have discussed, obviously in great detail in the report as well. And so, one of the biggest things, obviously, every time that we talk about the stuff that comes up is the total, kind of amount that has been raised in investment so far. And that's obviously what, and it's never to say that that's the sole metric for gauging the growth of the ecosystem, because that would be reductive, but it is one of the very important kind of metrics for us to actually gauge where we're at and where we're, headed towards. So I feel like that's why it's super important. And right now, when you look at the amount that has been raised in funding by, startups in Pakistan, I think the number stands somewhere at above, I think a little over $700 million from 2015 to 2022 year till date. And then that is, I think, roughly kind of making up 270 or 71 deals. So that's the total universe or kind of, quantum of deals that have happened through Pakistani startups so far. And as you can see, that's, a huge number. And interestingly, a lot of that investment has actually happened over most of 2021, a little bit of 2020, and then a lot of it is obviously, it continues to happen in 2022, as opposed to what we were kind of, thinking. A lot of the experts out in the market were thinking, activity will slow down in everything, which we haven't really seen that much. So that's one of the interesting aspects. And then, and so, when we look at the growth in terms of investments over the years, and specifically zoom in on 2021, we see that 2021 accounted for a total amount of $352 million raised in investment by Pakistani startups. And then that is across a total of 83 deals, which is actually 2/3 of what was raised from the total amount that was raised from 2015 to 2021. So that alone kind of shows, how much the ecosystem has grown in terms of the amount of capital that it has attracted, not only from local investors, but also from international investors, specifically VCs, and especially from countries such as the US, which has been kind of the newer trend that we have been seeing over the past couple of years. So that's one of the things. And then, kind of the predictions also related to the collective market cap of the startup ecosystem in Pakistan. Those predictions by experts have also been in Pakistan have also been super, optimistic. Some have actually said that right now it stands at, the market cap for all of startups in Pakistan stands between $1.5 to $2 billion, and it's actually kind of, set to potentially surpass $6 billion in the next 4 to 5 years, which is, we can actually see that we're kind of headed there. Especially when you look at the more recent rounds that have been raised in the country. So we also see that, the average ticket sizes have been increasing a lot over the past few years. Specifically in 2021, we saw a big jump. And so more money obviously will be coming in this year, as well as we saw Bazaar's deals with the deal, which was $70 million Series B round. Just the fact that Series B rounds in and of themselves have actually not been that common in Pakistan, and now we're seeing more and more of them. I think now we have a total of like 5 Series B deals, and 2 of them were in 2021, and I think one of them was in 2022. This Bazaar deal that I was referring to. So that alone is also a really good sign, and also the fact that investors like Kleiner Perkins, Dragoneer, a bunch of others, really prominent investors, specifically from the US, have actually entered the market, and that's really a good sign. And we have also kind of been seeing that executives from unicorns and decacorns have actually been investing in startups in Pakistan, and that's again a really kind of healthy sign of investor interest from abroad. And obviously, that investor interest is coming from a place of at least a place of understanding of the market, which when we have spoken to investors in the past, both local and international, and specifically international, it seems to be rooted in the idea that Pakistan seems very familiar to a lot of the investors who are coming from other similar markets with kind of comparable macroeconomic indicators and such. So that's one of the things that is kind of helping the Pakistani startup ecosystem out. But then there's also this huge aspect of the fact that investors, when they have started to speak to startup founders in Pakistan over the past year or so, especially ever since the pandemic, through kind of online channels and such, they were quite impressed. That's literally what we have heard, that there was a lot of apprehension about what they were going to deal with, or like what kind of founder quality would be there and things like that. But we have heard from a lot of really good VCs that that kind of apprehension actually completely went away once they actually got into conversations with Pakistani founders. So the quality of human capital, specifically of founders, and of the quality of startup ideas and such, has also significantly improved. And I say that because we conducted the 2019. I was actually the one kind of leading the 2019 study as well. And so all of the interviews that we conducted back then versus right now, we see a huge kind of shift in narrative, not only from international VCs, but also from local VCs and local players, where the conversation has become much more constructive and much more kind of focused on, okay, so like, we're here, but what do we do to actually move forward in a much more efficient manner and everything. So the conversation itself has changed a lot. Whereas, back in 2019, a lot of the interviews would start out with, what the key regulatory challenges were, which were one of the biggest hurdle to a lot of the players out there. That's one of the, I feel like one of the most interesting things that I've noticed. And then, but there's also obviously this other aspect where, we did hear from a lot of investors that high valuations that we're seeing currently in the market are not really perhaps a good sign. And that in and of itself, there isn't anything wrong with valuing a company high, but at the same time, it should be something that is, that founders and investors involved in all of those are actually able to solidify through, kind of like backed by evidence essentially, and is actually rooted in reality. So that's one of the things that, most of the investors and founders, even a lot of the founders, kept pointing out, that it's really important right now for us to kind of, keep ourselves in check as founders and make sure that we're kind of, valuing our companies in a way that we're actually able to stand by it in the future, and we're actually able to deliver on it in the future, so that the future of investments that are coming into Pakistan are actually going to depend and rely on how these companies, early companies who are raising a lot of money, perform in the future, which obviously in part depends on what kind of in what way these companies are valued right now. So that's obviously one of the areas that investors specifically said that they are a little bit wary about, and even founders pointed out that might not be the best kind of handled right now, if you will.
I want, sorry to interrupt here. One of the things that perhaps I want to jump a bit deeper into before going into sort of the valuations and sort of some of the challenges with that. I have a couple of questions with that as well, but sort of on the fact that the pandemic is a great accelerator and a great equalizer, right? In the sense that all of a sudden people who would have thought 13 times about coming to Pakistan were not doing that, they were on Zoom, and that unlocked Pakistan's ability to, and Pakistani entrepreneurs' ability to show that they're awesome and they're capable and they can do business the way other peers do around the world. And obviously that sort of catalyzed a whole, crazy amount of investment. One of the things when I was looking at your report that stood out to me was how much interest e-commerce has been generating, right? Mm-hmm. And I just want to get your sense about like what is it or what was it or some key factors that sort of drove that excitement around e-commerce. Obviously, I'm a policy wonk, and I look at e-commerce and digital payments as sort of the great opportunity through which we can document our economy, and documentation, the way traditionally seen by FBR and others, is, I think, the idiotic way in this modern economy to, get rid of the gray economy. In fact, digitization is the right path forward. And so e-commerce does that, right? So for me, it's exciting from that lens, but just want to get your sense, because you've looked at the ecosystem in such depth. Like, what was it that sort of led to this shift in saying, Pakistani e-commerce is the hottest commodity on the market?
So, I mean, I'll kind of like take a step back. And I feel like when I look at the different sectors, or like, as a practitioner from our conversations with people, but then also like looking at the data that we track through our deal flow tracker, I feel like one of the biggest things that we have also noticed over the years is that it's not just that e-commerce gets a lot of attention in terms of investments, and has been getting a lot of attention over the years in terms of investments, but it's also that the pipeline of e-commerce startups is actually pretty wide in comparison to any other sector in Pakistan. And I feel like there's also an intersection of different sectors where, it's also kind of like boils down to the taxonomy of things as well, where that's where the idea of like bifurcating or like not even bifurcating, it's more of like disaggregating the data over time to like make it even more detailed so that we can see all of those nuances that we usually kind of, that usually slip through the cracks, is something that we've also learned over the years. And that's why we have started to kind of like, like disaggregate our data, sector-wise data more and more as we move forward to say sector 1, sector 2 for each of the startups that we track data for, right? So when you look at it like that, a lot of the e-commerce companies that we zoom into, and this is not obviously in the report, it's just, something that I would love to share with you, is that a lot of the times when you go into these e-commerce companies and look at what they are, you actually see a trend where there is another like, subsector that they're working in, but they're also an e-commerce business, right? So there's that. And then there's also the fact that the pipeline of e-commerce companies in Pakistan is really, really wide. There are a ton of e-commerce companies versus when you look at fintech, you don't really have that many fintech companies. But then with fintech, the interesting thing is that we've been noticing over the years is that it's been slowly and gradually on the rise in terms of the average ticket sizes. So when you look at the total amounts raised by e-commerce sector startups and then fintech, for instance, I'll give you a comparison. And this is for data from 2015 to 2022 by TD, right? So when you look at the two sectors, e-commerce has actually raised $444 million so far, and then fintech has raised $116.9 million. So that's almost, e-commerce has actually raised almost thrice as much as fintech. But when you look at 2021 specifically, and when you look at the average ticket sizes, what we have been noticing is that over the years, the gap between average ticket sizes of fintech and e-commerce has actually been bridging. So even if you have fewer fintech deals happening right now, you see that they're raising much more than they were before in comparison to their own ticket sizes, but at the same time in comparison to e-commerce as well. So that's also something that's super interesting that we have been noticing as a trend. That said, I feel like fintech is interesting because it obviously it intersects almost all of the sectors. And you might have been, kind of noticing more recently as well, is that there are a lot of companies that have been functioning in the ecosystem in other sectors, whether that's agri-tech, whether that's, groceries, whether that's mobility, have actually started to go into fintech as well. So I feel like that's also another interesting aspect of it. And I feel like from that perspective, then it makes fintech even more attractive than e-commerce. But obviously, right now, the dynamics between e-commerce and fintech has not really flipped completely. But I'm just saying that fintech is kind of like catching up slowly and gradually.
And on the fintech side, really quickly, again, this is not in the report, but since I have you, I'll sort of, bounce off ideas off of you. Is this sort of shift where agri-tech, other startups are beginning to go into fintech? I see a couple of issues with that, right? One is these businesses are still fairly young. They're diversifying into new sectors that perhaps they should be focusing on their core competency. So is that the right approach? And that's a question to you, and your thoughts on it would be awesome. But two, also from the sense that, is that shift also just happening because investors are like, hey, this is what we're willing to fund, and entrepreneurs are like, you know what, we need to pivot into this because that's where the pool of money is? Because we've seen fintech sort of like grow during the pandemic, in particular, all over the world, Southeast Asia, Latin America, Brazil, etc. It's just been the hottest thing in the startup sector around the world. So how much of the shift that you're talking about is just there because, it's easier to get the eyeballs and the attention of the investors? And perhaps, do you think it would be better off if founders were focusing on their core competencies versus being too quick to diversify into sectors that perhaps they shouldn't?
So that's a really interesting question. But I feel like the thing is that when you specifically look at, some of the startups that have kind of like, diversified and like, gone into fintech, they all kind of work in their own specific sectors, which have different fintech related needs, right? So for instance, if a company is working in agri-tech and they go into fintech, that does not necessarily mean that they've gone into payments or whatever. And so a lot of them have kind of like gone into microloans or for like farmers. Some of them have gone into like, digital payments. Some of them have gone into digital ledgers or something, which not strictly fintech or whatever, but at the same time is obviously a subsector of fintech. So the thing is that it's also kind of, the fact that everybody is kind of working in their own particular sector. And so it kind of almost works as a complementary aspect that they're adding to their, their existing startup offering instead of completely pivoting, which I don't really see if there's anything like wrong with that necessarily. And what I can also kind of say from like, observing a lot of these investments that have more recently happened is that there's obviously appetite on part of the investors, right? They've obviously one of the biggest things that investors have shared with us in terms of, their comfort with a certain deal is that if they've seen it happen somewhere else, if they've seen it happen and done in a similar ecosystem, that kind of helps a lot with their apprehensions, right? Going into a certain deal. And then obviously if there are people on a certain deal that they really trust and that they think that, are really have really deep insights on the kind of market in question, which in this case is obviously Pakistan, that also kind of increases their comfort level in investing in those deals. So I feel like it's a combination of both. And then the third thing obviously is what you said, which is, kind of the fear of missing out, which works both on the part of investors and then founders as well. So I feel like maybe in some cases, some founders are just doing it for the heck of it, but then others actually know what they're doing and kind of, moving towards a more kind of like holistic solution in their own subsectors that they're working in a more mindful and a more kind of, intentional manner. So I mean, it's still to be seen. I can't really be sure. This is just like my own personal opinion, but I feel like we'll find out over the coming years. But I don't personally see anything like wrong with it, because I feel like if anything, it kind of helps make those particular subsectors even more, help strengthen those subsectors even more, right? And then that kind of also ties in with the regulatory aspects of it. Is unless somebody goes out there and does an agri-tech plus fintech play, we're not going to know what the regulatory challenges are going to be for it. So I feel like we need to see those plays happen as well, so that the regulatory environment also kind of moves along and becomes much more sophisticated as the ecosystem is becoming in terms of the subsectors.
Yeah, it's interesting you mentioned the sort of why diversify and complement the things. I think that again is very important, and from my sort of outside in perspective, it's actually also an indictment of Pakistan's traditional financial ecosystem, because it sucks and it doesn't meet the needs of businesses, and whether it's farmers, whether it's merchants, whether it's individuals. And so whether it's e-commerce or things like agri-tech or health tech or whatever, at the end of the day, if the customer does not have the ability to pay for these services or bridge their working capital needs or keep their accounting practices in check, et cetera, there's no credit history, all of those things, the startup's
Exactly.
growth itself is going to be stagnating, right? Because
Yeah.
payments ultimately is the core. And if there is no solution, then perhaps it's best for the entrepreneur to solve for that while they're solving the problems for their core customer base, because
Exactly.
the customer needs to pay. And I think that's very interesting and exciting, because it is the bottom up disruption of Pakistan's financial ecosystem, where banks who've gotten fat off of lending money to the sovereign, they're not going to do that. So somebody has to, and it's great that entrepreneurs are realizing that perhaps they need to intersect with that. And yes, there will be some risks, and we need to learn more about what's going on. But to me, it's also exciting in that sense, because again, as I said earlier, the digitization of commerce in Pakistan is such a missed opportunity, and I think it's great that the ecosystem is raising a lot of money on fintech and e-commerce. So that's really
And
exciting.
also, I feel like you said, I feel like it's also that e-commerce is also at a certain point, I feel like kind of halted or like hampered by the fact that you have such an underdeveloped fintech sector, specifically when it comes to like, just like you said, like, customer data and all of those things, but then also the fact that we don't even have like a good, like lending mechanism or even like loan opportunities for a lot of the people who are like, for instance, millennials who make up a huge chunk of our population, who are nothing like our parents, right? Like we're not the kind of people who want to be, kind of sitting around, 30 years of their life, kind of, saving up and then buying a house. Instead, we're kind of, we come from a place where we're like, oh, let's buy it, like, loan money, buy it, and then we can pay it back. And I feel like that's such a huge chunk of our population, which is like, kind of middle class SES. And then the needs of those people are not being addressed. So like, you don't have, like there's so much more, like asset management to like, there's a bunch of different aspects of fintech that are really not being addressed. And even like something like insurance, right? You don't have like the kind of insurance plans that are out there. And then on top of that, the kind of like, the way that they're being administered, the kind of tools that are being used to administer those, it's just like, it's very, very archaic, right? So I completely agree. Like the banks have in Pakistan or like, anywhere in the world, I feel like do not really have an incentive to kind of, go in and be at the forefront of like digitizing fintech and things like that, or like finance in and of itself. But like, I feel like in Pakistan, at least we have kind of, startups coming to the forefront where, we're seeing that they're kind of, more in tune with the needs of the customers and the growing kind of, subset of customers, which is the young people out there who have completely different needs from what our parents' generation had. So I feel like personally, I feel much more hopeful with like the fintech startups that are out there, as opposed to any of the bigger kind of, financial institutions.
Yeah, I think we're definitely in agreement there. One of the things that stood out to me in the report, and you have some recommendations for it, and I would love for you to bring them to the table as well, is that local angel participation has remained low. And that they're not perhaps, and it struck out to me because you look at other markets like Indonesia, India, Nigeria, Brazil, local angel are sort of the core foundational block of the ecosystem itself, right? They are the ones who are closest to the action, understand the market the best. They want to make bets on sort of opportunities they see, and then everybody else from the outside sort of comes in at a later stage when that sort of foundation is built. But in the report, you say it's remained low. It's a concern. Why is that the case, and how do we change that? Because I think that's a big missing piece of the puzzle here.
Yeah, for sure. So there are actually two key aspects of why we say that local angel participation is actually low, right? So the first piece is actually the fact that we need more angel investment. But then the other piece that we also kind of talk about in the report is that there's need for more local angel investment at pre-seed stage, which is not something that we have seen so far. And I feel like that is super important for us to actually widen the pipeline of investable startups at seed stage and later stages for other investors, right? So that's what I think we discuss in great detail in the report as well. Is that ideally a lot of the times the VC investors typically come in at seed stage, and so the pre-seed stage is an area that typically gets a lot of contribution from angel investors, whether that is international or local. And so the interesting part that we've noticed in terms of the data that we are looking at is that international angel investment has actually, in terms of participation, right? So like deal participation ke hisab se, international angel investment has actually gone up, like significantly from to 2015 to now, or at least from 2018 to now. And when in comparison to that, when you look at local angel participation, that hasn't really changed that much. I can actually give you the exact figures for that as well. So for instance, we have local angels, 10 of them were participating in different rounds in 2018, and versus 2021 saw 11 local angel investors participating in different rounds, right? And for international angel participation, we saw 5 in 2015 and versus 37 in 2021. So that's in comparison to local angels, which is 11 in 2021, or was 11 in 2021, 37 is actually a pretty big, jump. And not just that, when you look at the, kind of the, so going into a little bit more of detail of like how we track this data is that the amounts that we track for each of the deals that happen, obviously we don't know how much each of these investors are investing into that particular deal, which is why we can't really say a lot of the times how much of a particular deal is attributed to the angels that are participating, local versus international, or how much of it is attributed to VCs that are participating, local versus international. So a lot of the times we talk in terms of deal participation. So that's how many of these investors are participating in how many deals in terms of the deal count. And then the other aspect is that when we talk about the amount raised, we talk more about the way that we frame it is that angels, Pakistani or local angels have participated in this many deals, and the deals that they've participated in, which is, for instance, hypothetically, if it's like 11 for local Pakistani startups or like local angels, how much are those 11 deals making up for in terms of their dollar value, right? So that's how we kind of try to quantify it. That's the best we can do right now. And so when you look at that, you also notice that the local Pakistani angels are actually participating in much smaller rounds as well. Versus when you look at the international angels, they participate in much bigger deals with like much bigger dollar value. So that's also another gap. And so when you zoom into the problem, kind of try and understand why we say that it's important for angel participation to increase, is because of the fact that we want to increase angel investors' participation at the pre-seed stage specifically, but then also increase their participation across different stages, especially through people who are coming, high net worth individuals who are coming out of family businesses and such, which is largely money that has not been mobilized in Pakistan right now. I mean, we have like family offices, maybe one or two tops, and that's it. And then we have like angel syndicates. We have individual angels and such, which we are tracking the data for. But then like beyond that, there's an abundance of kind of like liquidity in the market that we're not really seeing translate to startup investments, which is what we have kind of advocated for. And obviously that's where the government can step in terms of incentivizing startup investments through angels, through local angels. And interestingly, when you look at other markets, we have actually spoken to a lot of the international investors who are working in other similar markets and even like bigger markets such as India. And one of the key differences that you see there is that these funds, VC funds, have actually been able to mobilize money locally, which is not really something that's happening in Pakistan right now. And I feel like that's also something that ties in with the angel investment wala aspect, and that eventually kind of goes back to the regulatory issues where we're seeing that even though this regulatory regime has been much more progressive and much more responsive and much more agile than any that we have seen before, there still are areas that need to be kind of paid, like we need to pay attention to them proactively so that we can solve for these issues in the longer run and kind of mobilize local money as essentially as soon as possible.
Yeah, one of the things that perhaps, Pakistanis generally, and this is a political economy problem, right, is twofold. And I think you and your team are doing such an awesome job in the startup side to solve those two problems. One is transparency and data access. It's very difficult, and you putting out your research is an amazing service to the country and to the startup ecosystem writ large, because it brings transparency, right? And we all can read the report, we can see the data, and we can say, okay, here are some interesting trends, and we're talking about them. I think the second one is that we often don't look around the corner in terms of obstacles that perhaps aren't issues today, but will be tomorrow, and try solving that. And you mentioned about the regulatory challenges, and that's a good segue, which was my next question was, you identify some issues, right? And I'll pose this question in a different way. And you're sort of knee deep in the data and the ecosystem itself, and would love your thoughts on this is, what are some obstacles that we perhaps need to advocate, the government, policymakers, others, etc., to get rid of proactively, so that not only does Pakistan get to $1 billion and more in startup funding a year, in the shortest period of time possible, but sustains it? Like, what would you say, are key factors from a policy side that can accelerate that jump to $1 billion and more?
Yeah, I mean, for sure, just because we were just talking about this, the mobilizing local money, because there's just an abundance of wealth in Pakistan. And what we are seeing right now is like nowhere close to where it could be. Because all of that, I feel like right now, I don't know, like, it's almost become a joke at this point, but like, I feel like most of it is going into real estate, which needs to change, obviously. And like, people need to kind of put money into.
You read my mind.
Yeah, I mean, that's the thing, right? Like almost everyone in the ecosystem has been saying this for so long. This big, and obviously, like, the reason why people are investing in real estate, which we can't really hold it kind of, against them, is also because it's incentivized, right? There is like, because that's the core of it for investors. It's all about the money, like, it's all about the kind of ROI of whatever they're doing. And so I feel like in that sense, the government can play a really important role in terms of incentivizing it, maybe giving some sort of like tax breaks for investors who are investing in startups. And what we're seeing right now is actually the opposite of that, right? So like we've had, and this is obviously like anecdotes that we've heard from a lot of investors, is that, okay, every time you make an investment, you get these like calls from like FER or whatever, like, a lot of these like abundance of questions about like, where this money came from. And this is for like really small ticket sizes, right? This is like $500,000 or something, not even like millions, a million ke marks or like, $1 million.
Meanwhile, you can have undocumented cash transactions for property without any questions asked. And I have this saying, I often repeat this to friends, is that so long as it's easier and there are less barriers to investing in Plotistan, you will always struggle to raise investments for Pakistan. And that's the problem. You're alluding to that same problem right now.
Yeah, 100% for sure. And so that's literally like stuff that, people, investors, obviously, like, unnamed investors are telling us, is that the regulator needs to listen to that, right? Like, we need to understand, hey, if so long as the regulators in Pakistan keep treating investors who are putting money into startups like that, things are not going to change. So let alone the incentivizing aspect, right now we're actually creating more barriers for people who are investing in startups or going into startup investments. The other thing is obviously that even when there is appetite on part of people who are coming from like family business background and like, have a lot of family wealth and things like that, or even if it's, other people who are, have been executives in like, MNCs or like, a bunch of different companies and have accumulated wealth over the years and are interested in kind of, going into startup investments, for them, there aren't a lot of resources for them to understand what the startup ecosystem is about. So there needs to be kind of, bridging of that, which I mean is not necessarily a regulatory issue or anything, but just saying that needs to be done. And we talk about that in the report as well. So giving them access to quality deal flow and startups that are investable is also super important, because a lot of these people who are going into startup investments have to learn everything about the startup ecosystem and more. And so I feel like anything that can be done to facilitate that process and help them understand startup investments and align expectation in terms of, what founders expect these days, and then what kind of frame of mind investors go into deals with. I feel like that would be super helpful. So access to deal flow and all of that. But then from the regulatory perspective, I feel like one of the biggest things is also that we need to be super, just like you said, right? Like we need to kind of have more foresight and kind of understand what are the problems of tomorrow and what are those things that we need to kind of like do our homework on today and understand. So for instance, like, one of the emerging sectors in Pakistan is actually digital trucking, right? Or what do you call it? Like, essentially, digital trucking, I'd say. Or like fleet management and things like that. And then the interesting thing is that I'll actually give you an interesting fact on this as well. Which is that digital trucking has actually been, in terms of the total that has been raised by digital trucking startups over the years, has actually kind of been inching closer to the top sectors that have raised the most amounts in investments, right? So for instance, there is e-commerce. When you look at the data points from 2015 to 2022, year till date, there's e-commerce, there's fintech, there's trucking, just like I said. At number 3, and it has raised a total of $30.4 million so far across only 9 deals. So wow. You have a sector that is kind of like, we didn't really see any, like, I don't think any digital trucking companies up until 2019, maybe, if I'm not wrong. And so this is all of kind of growth or like activity that we have been seeing in this particular sector over the past 2 years or so. And most of these companies are companies that have been founded in either 2020 or 2021 as well. So what are we doing? What are our regulators doing? All of them, FBR, SCCP, SPP, what are they doing to actually prepare for this sector and to kind of facilitate the sector better, so that we're not kind of standing in the way of the growth that it can experience? And so I feel like that's, again, a really interesting area. Fintech is one of the biggest, like, when you talk about regulations vis-a-vis like different sectors, fintech, again, is like one of the biggest things. And we did a briefing on fintech last year, which actually talks about this in great detail, is that there is the barrier to entry in fintech in Pakistan is actually pretty high. Whether that is because of the paid up capital issue or other regulatory challenges that startups have faced over the years. One of the key things that startups have pointed out, and we talk about this in the report as well, is that because fintech startups have such a high cash burn rate, a lot of the times the wait time that they have to face, because after applying for certain licenses and such, is actually almost like it's almost like a value of death for them, right? Like, you're burning all of this cash, but you're not really making any money, and you're waiting on approvals, which a lot of the times these approvals are not too clear either, right? Like, a lot of the time startups don't necessarily, like, the regulators don't necessarily make it super easy for the startups to understand what are some of their compliance needs. So I feel like that clarity in terms of policy, and for the policies to be there proactively, so that startups don't have to do all of this stuff kind of in retrospective, and kind of are penalized in retrospective for things that they didn't even know that they had to do. So I feel like things like that have a huge impact specifically on startups who are working in fintech. And again, those startups are much more, or not much more, but they are super important because of the fact that fintech is such a cross-cutting sector, and it almost impacts all of the other sectors that we have seen so far.
Yeah, I think the last thing a startup wants or needs, right, is waiting on something from a policy perspective to move forward and burning cash at the same time. And even trucking, I remember reading about it from just previous research, that one of the issues is that the enforcement around weight loads on trucks is a big problem in Pakistan. And that's actually bad for taxpayers, because taxpayers are funding road infrastructure and highway infrastructure. And if you put overcapacity trucks on that infrastructure, the road sort of buckles. and then you have to pay for repairs and rehabilitation of that road. So A, it's a direct impact to taxpayers, but B, trucking startup, which is a formal business and is trying to be compliant with the laws of the land, just cannot compete when they're, for example, carrying 30 tons of weight, and another one is carrying 50. They just won't be competitive, right? Because the cost structure is going to be different. I'm just making these 50-ton numbers up so people don't hold me to that, oh, you got that number wrong, just hypothetically. So I think enforcement, you said SECP and State Bank, but yes, it's also a National Highway Authority problem that needs to impact for trucking in that particular instance, right? So I think there are intersections with different regulators and ministries at the provincial and the state level that perhaps we need to proactively address as well. Ambareen, yeah, go ahead.
Yeah, I was just going to say that, just like you said, in HA, there's also like in case of other startups in other sectors, for instance, NADRA actually plays a really important role, right? Like how that sector can actually reach kind of its optimal potential. And I feel like that won't really happen, just like you said, unless there's like really kind of, rigorous interaction between all of these different aspects of the regulatory environment. And then obviously back to the stakeholders, which we're seeing, like, honestly, we're seeing it happen much more often and in a much more organized manner than ever before. And it's not just the fact that the regulators are getting in touch with the stakeholders and like, getting an understanding of their, their challenges and everything, but it's also that, they're acting upon those, recommendations and things like that. And there's like follow-up and there's like continuous and constant sort of dialogue. And that's super important. But I feel like for sure there's so much more. And there's also like this aspect where, you like the regulators also shouldn't solely rely on practitioners like us or key stakeholders like startup founders or investors or entrepreneurship support organizations to actually tell them what the challenges are, even though that's like one of the big parts of the process and it's super important. At the same time, I feel like they also need to build some sort of a mechanism internally where they have maybe a body of experts who are, kind of advising them in a much more agile manner, and those kind of, task forces or something where, it's much more, kind of agile in the sense that it has like expert groups almost of like a lot of these like different stakeholder groups, founders, Lelie, some investors, some international investors, local investors and such. Because the thing is, when we talk to these, stakeholders, whether that's founders or investors, a lot of the times what happens is that because certain people that we talk to are not really directly dealing with that problem, they somehow think that it's not really a challenge. And that's partly something that we talk about in terms of the exit environment and things like that. And then how does that tie in with repatriation of funds and the clarity or like lack thereof of policies around that? I feel like that's also super important and kind of ties in with the current conversation that we are having as well.
No, I fully agree. And I think, again, that foresight, as you said, is so critical, right? Especially for startups and entrepreneurs, because they need to scale at hyper speed. And the last thing that they want is policy volatility and uncertainty, where things are not moving at least half the speed that they're trying to move at, right? From a policy cannot move at that same speed, and we have to be cognizant of that. But at least it can try to catch up and be more sort of, the thing I often say is that it has to be biased towards innovation and entrepreneurship. That should be the approach of policy making in Pakistan, because that's what the economy needs. And that's the only way to have bottom-up disruption that we are in such dire need of. And I think that it's the need of the hour. But Ambareen, this has been a fantastic conversation. Kudos again to you and your team for putting out the report. For those tuning in, the links to the report are down in the description below. Please do check it out. Before I let you go, I always ask this of my guests: what are 2 or 3 books that you would recommend to the audience?
So I actually thought about it beforehand and kind of like, because I feel like I won't call myself an avid reader. And that's probably partly because I think I have like ADHD. I don't know. It's like not diagnosed, but I have a lot of the same symptoms and it's still to be diagnosed. But at the same time, I feel like I do much more, like I do better with like audiobooks and things like that. So I've been like trying to kind of switch to that. But I'll tell you a couple of the books that I've read that I felt like had a huge impact on almost like they almost served as like a like what you would call like a paradigm shift of sorts, like changed my perspective on a lot of the things that mattered to me, or like, I used to think about in a certain way. So for instance, one of the books is actually Cartography. You might have read it. It's by Kamala Shamsi. And the reason why I loved that book, and it kind of, changed the way that I used to think about like, patriotism and things like that, is that I feel like for a lot of people of our age and our generation, millennials, I feel like they have a different sense of patriotism. Like their definition of patriotism is very different from what you would have experienced before, or like people would have experienced before. So I feel like Cartography to me was almost like the characters were a reflection of our history in terms of West Pakistan and East Pakistan and our treatment of each other. And I feel like the characters kind of like, really brilliantly kind of reflected that dynamic of like, the kind of the history of like rejection and like, heartbreak and things like that. So I absolutely loved it. And then the second book that I really enjoyed, and that I actually, full disclosure, I actually was not able to finish it, but I still loved it. And only because it was actually super dense, was is Being Pakistani. And again, this ties in with like identity and like, your kind of like how you view your country versus like, your relationship with your country and all of that. And it's by Reza Rumi. And I thought it was super, super interesting because it kind of, I never knew Sindhi culture and like Sindhi history the way that I did after I read this book, because I felt like, obviously our textbooks have really taught us nothing. And there's such like amazing, really empowering, feminist stories, folk stories that we can learn so much from. And it's almost like, for years and years and years, because of colonialism, we have kind of been made to like think about our own culture. And you know how they say like for Jewish people, when they had their kind of, first interaction with like a different culture, it's like, there's a term for this, which is almost as if like you kind of undervalue your own culture, especially when the majority culture that you're dealing with in that context has always told you to kind of like, essentially undervalue your own culture, right? Like in different ways. So I feel like that was super interesting because it kind of made me understand the nuances of like human interaction across different races, but then also across different nationalities, and how that impacts our own identity, and how I had to kind of take a step back and kind of understand this whole idea that, feminism, and obviously the book is not solely like, it's not about feminism specifically, but like, I'm just saying that I took away certain parts from it that I really thought were, kind of resonated with me in terms of that. I don't know if that made sense, but that was one of the books. And then the third one is actually Invisible Women, which I have literally just started out reading. And it's actually a book that talks about how there is a lot of bias in data and data and research, a lot of gender bias in data and research. So, whether that is research and data that's done in medicine, how cars are made, how car seats are made, medicine itself, or pharmaceuticals, a bunch of different things, just like the disparity in terms of how research is done and how it always, kind of sees women as invisible. And so I found it super interesting because it kind of intersects two of the most important things in my life, feminism and research. So I love that. And I feel like everyone should read it because it's interesting because, again, kind of, taking it back to the study as well, is that a lot of the times when we talk about gender bias and like, gender disparity, people think that we mean gender disparity in the most like obvious sense of the words, which we don't. There are so many different things that are like very implicit. And it's not that, people look at a woman and they're like, or a female founder, they're like, oh, I'm not going to invest in you because you're a woman. It's more of that there are biases that are so deeply entrenched that we, our systems are made in a way that we kind of penalize women for being women, or like, women for giving birth, or for taking maternity leave, or a bunch of different things, right? Just things that come with our existence as women. I feel like those are some of the things that, kind of tie the study together, but also this book, which kind of, really beautifully explains that whole phenomenon.
Thank you for those recommendations. I've read Cartography, not the other two, and Raza Rumi is awesome. So great recommendations. I'll add them to my list as well, and people should add them to theirs as well. But Ambareen, thank you so much again for your time today, for sharing the insights. Audience listening in, check out the full report. And Ambareen, you and your team, kudos to you for all the hard work, for bringing us data and transparency that we can look at and analyze. And we'll have you soon, hopefully, next time when more details come out about where the Pakistan startup ecosystem is and where it's headed.
Thank you, Uzair. I'm so sorry, my dog has finally started to bark.
The dog knows that time's up. So, all right, thank you.
Thank you. Bye-bye.